Welcome back everyone to another episode of the Anomalous Investor. So what's happened in the last week, it's been pretty much been a progression over some of the topics we've talked about in previous episodes. We're seeing really an escalation in the speed and the seriousness of this pivot from the U.S. dollar taking place, which is ultimately important. As you guys know, I'm a huge macro believer and really just encompassing it into our investment strategies and ultimately just kind of keeping your ear to the ground so that you can make sense and kind of see which direction the wind is going to blow before you go out and start, pitching a tent and stuff like that with your investments. Now, we're going to go over the top 20 things here. There's been a list floating around on Twitter that pretty much summarizes it perfectly. So we're going to go over that and we're going to talk about really just how this can kind of roll over into this week here. I know that the biggest thing that we're going to talk about this week, and it's really, I'm hoping for more coverage on some of the things that we're going to talk about in this video. But I know that the biggest thing that we're going to see on TV this week is going to be the Trump indictment. And I know that as far as for monetary reasons and traffic and stuff like that, it's a much more attractive story and it's less, I guess, boring, at least at the moment, than Saudi Arabia doing a deal for an oil refinery or something like that. It's like, oh hey, look, first time in history, a U.S. president's getting arrested or getting indicted and stuff like that. So that's a much more attractive topic, and I just don't want that to overshadow the seriousness of what we have here going on in the macros and literally the world coming together, and some of the countries and stuff that have like opposing views to what we know here as far as we're in the West are literally coming together and getting stronger. BRICS is literally strengthening by the day. At least last week they were on a roll. We'll see what they come up with this week, but last week they were on a roll. So and when you move that fast, it's not a spare of the moment thing. This is something that has been under works for a while. And I remember even talking about like the rise of China and stuff like that when I was in high school and when I was in college. And a lot of my professors even said that, it's not going to happen in your lifetime because of GDP and stuff like that. And the world is changing relatively quickly. So if you're not a macro person, I'm not saying get sucked into it, but you have to kind of know what's going on. You can't just live obliviously, especially if you're going to invest. For the most part, you can tuck away. I do recommend. I did my Never Broke Again webinar yesterday, and one of the things I was saying was if you are investing for the long term, or if you're not someone who's looking to do swings or trades and stuff, typically you can do the set it and forget it method, which is investing in like an ETF like SPY or investing in the S&P 500, and typically over the long term these average up. If those were if SPY goes to zero or S&P goes to zero, we're gonna have bigger problems anyway than investing. So we'll probably be investing in like Glocks and bullets and stuff. That'll probably be a much more important investment to make if that type of catastrophic event were to happen. So we have to keep in mind here that we are seeing a division here in the country when it comes down to politics and stuff like that. And I'm really going to kind of test my theory this week and start watching a number of different stations to see kind of what they're reporting, because it's looking like to me that we're having a whole thing as far as racial issues and Democrats watching Republicans watching Democrats. And we're kind of like all at this thing here where we're just staring at each other and we're not paying attention to, at least on the, for, I guess, everyday folk or like retailers and stuff like that. We seem to be ignoring some of the things that's going on in the grand scheme of things. And that's really something that can come back to haunt you here when you're oblivious or you're behind the eight ball and you're trying to play catch up. So I don't want that for any of us individually, and certainly not for us as a country, as a collective. So make sure that you are staying in tune with that and not getting sucked into some of the things here that are playing out in front of us, some of these shows and charades and stuff that we're seeing here to, in my opinion, kind of distract us. So with the Trump situation, and while I'm on that, I'm not, as far as for whether or not they find him guilty or try and get him to not run again in 2024, that is besides the point of what we're seeing here. What we're seeing here as a collective is an aggression from and really from both sides. What we're seeing here, even as a country, is an aggressive move. If you are doing something that the other side doesn't like, then they're going to be very aggressive to try and remove you or silence you, especially if you have a voice. And we're seeing this all across the board, no matter what side you're on, no matter what you believe. And that is a very dangerous precedent to start with. You can't. When you start seeing stuff like this here, this is when you start having severe internal conflict, and things start to escalate. When we start seeing these abrasive attacks and stuff like that. So ultimately, when you have this type of, I'm trying to put this into perspective here, but ultimately, when you have this, okay, well, you're influential, we don't like you, we're going to go after you. This is something that we've seen play out, whether that be on, with the Twitter acquisition from Elon Musk and him doing it and saying, free speech, and you're going to be able to pretty much say whatever you want on there, versus, who gets to decide what and where are their allegiances when it comes down to, okay, well, here's what we believe is safe for you to communicate. Who gets to decide that? Is it Apple? Is it Google? Is it Facebook or Meta? Who gets to decide, what right is? Because if you're not using it, even if you're saying, okay, well, we want to appeal to all people, so that means that you're not doing it from a religious standpoint. So where are these morals coming? Where do they come from? And when we have stuff like this, you see there's going to be retaliation, there's going to be back and forth, and that just drives further division. So I want us to kind of just understand here what's taking place and literally what we're witnessing, because I promise you, it's bigger than what we're seeing here from the political standpoint. It's bigger than what we're seeing here on Fox and CNN and all that kind of good stuff. From Democrats, Republicans, it's different than what we're seeing here. It's more serious than what we're seeing here. And it's never at the surface level of what you're understanding. There's something much deeper going on here, and it's driving a wedge. And there was a time, where you could disagree and you didn't necessarily have to, die because of it, because you had opposing views and stuff like that. You didn't have to be destroyed or canceled or something like that. It was the collective of saying, okay, well, we come together, we'll vote, we'll see what happens, or we'll disagree and we'll work it out and stuff like that. But now it's like I don't agree with you, so now you need to disappear, or you have to cease to exist, or your influence needs to be taken away and stuff like that. So just kind of keep that in mind, that we're seeing this aggressiveness taking place here. And when aggressiveness turns into hostility and stuff like that, it typically it's hard to stop that train derailment. I think that's the best way I can put it. So just kind of keep that in mind here going forward, because when this type of temperament, this type of stuff, this spills over into, you can say, what does this have to do with that? But this spills over into the policies that we encompass here on the local level or the national level. And it certainly will spill over into how we handle foreign affairs and how we handle foreign issues and stuff like that, like the strengthening of BRICS and the pivot away from the dollar, which we're about to get into. So all this goes hand in hand here, and when you set the tone here, this certainly spills over into multiple avenues here for the country and for retailers such as you and I. So let's take a look here at the top 20 things that has happened pretty much in the last week. It's a weekly recap. I've seen this floating around on Twitter, so I'm not sure who came up with this or who it belongs to. I'm not sure, but I've certainly seen this floating around, so we're going to get into it. Number one, Saudi Arabia enters trade alliance with China, Russia, India, Pakistan, and 4 Central Asian nations to step further away from the reliance on the U.S. dollar. Number 2, China and France complete first LNG gas trade using Chinese yuan, ending reliance on the U.S. dollar for energy trades. Number 3, China and Brazil to settle trades in their own currencies, ditching the U.S. dollar. Number 4, Brazil, Russia, India, China, and South Africa, BRICS, are developing a new currency, State Duma Deputy Chairman says. Number 5, Saudi Arabia partners with China to build a Chinese oil refinery for 83.7 billion won, 12.2 billion U.S. dollars. Number 6, Kenya signs deal with Saudi Arabia and UAE to buy oil with Kenyan shillings instead of US dollar. Number 7, President of Kenya tells citizens to get rid of US dollars. Number 8, Association of the Southeast Asian Nations considers dropping the US dollar, euro, yen, and British pound for local currency filing settlements. Number 9, El Salvador president officially signs bill eliminating all taxes on income, property, and capital gains for technology innovations. Number 10, U.S. Senator Elizabeth Warren launches anti-crypto re-election campaign. Let's see how that works out. Number 11, India to settle trade to Indian rupees with certain countries instead of U.S. dollars. Commerce Secretary says. Number 12, Chinese yuan surpasses the euro to become Brazil's second largest currency in foreign reserves. Number 13, U.S. government to sell 41,500 Bitcoin. $1.18 billion connected to Silk Road in 4 batches this year. Number 14, Hong Kong regulators to assist crypto firms with banking in effort to become a digital asset hub. Number 15, Binance and CEO sued by US CFTC over alleged regulatory violations. Number 16, this is a big one. U.S. Social Security funds are projected to run out by 2033, Reuters reports. Number 17, 5 major banks raided by French authorities in £100 billion fraud investigation. Number 18, former President Trump says President Biden is directly responsible for the bank failures and creating an economic catastrophe that will only get worse. Number 19, MicroStrategy purchases an additional 6,455 Bitcoin, or $150 million worth. And number 20, President Biden says the banking crisis is not over yet. Now, you can tell by the thumbnail I created, we're going to deal with a few of these because this gives us insight into what the near future is going to look like and what we can kind of expect and kind of where we should be positioning ourselves as investors. Number one, we're dealing with a lot of these countries here pivoting from the U.S. dollar and trading in either their own currencies or going over to BRICS to get around the U.S. dollar. I've explained this in several videos here. Just to give you a quick recap, I won't get into it too in depth on here, but ultimately when you print currency or you inject currency out, it has to be absorbed or brought back in order to technically get rid of it in a way or attach it to an actual asset. That's why we see this consistent push up in things like real estate, education, healthcare, really anything that we have to attach to, because money is debt, so we have to attach it to these assets here so that we can have people trade time and stuff and labor for it and make interest on it. That's the spread. That's ultimately how these banks and stuff are going to make profit for the most part. And, obviously they're doing fractional credit, all this kind of good stuff plays into that. So our ability and our willingness to go into debt is what directly measures the health of the economy. So that's why if people stop taking out mortgages or stop borrowing money, the money stops circulating. The money must circulate at all times because it is debt and it must be growing, it must be running, and it must be gaining interest at all times, or we pretty much go into a period where we have to absorb this currency, and you can either have inflation or deflation and those type of situations here. So right now we're trying to absorb all this excess currency that we printed out during the pandemic and stuff like that because we don't have a war or something like that to dump a lot of the money into, which is why a lot of that money is going to Ukraine, but that's a different story. But ultimately, that is what happens when we are dealing with the type of system that we have. So we have to, if we don't borrow money, if we're not borrowing money to go buy mortgages and buy cars and spending money on credit cards and stuff like that, they'll say, oh my God, the economy's shrinking. We're in a recession. Yeah, this is bad. Everybody sell, so this is why we have to be consistently attaching our money to debt. So if these countries stop, especially with Saudi Arabia, stop doing these oil transactions in dollars, that's even more currency that's going to come back here, which means what? It means it has to be absorbed, which means we're going to see higher inflation yet again. So the biggest thing is, and this is one of the things that you can kind of think about like the whole 2008 period when Obama did the bank bailouts and too big to fail, all that kind of good stuff like that. And we pretty much, I want to say doubled or tripled our currency supply at that time. we had very minimal inflation because people are upset about the whole Iraq war and saying, oh, we spent $20 trillion, but that gave us a consistent place to pump money into so that it wasn't just sitting here in banks waiting to pretty much being forced to be loaned out to cause this inflation. So what we have here from like the pandemic, and the reason we got inflation so quickly is because we didn't have that, and this is in my opinion here, but I know typically war is very expensive, so it's a great place to dump cash, and I don't care what anyone says, that's why I believe there's a lot of cash flowing to Ukraine. But we don't have that war right now, so we got inflation relatively quickly and saying, okay, well, all this cash is sitting here because we handed out the money and we did these bailouts, and it wasn't necessarily to the banks or the institutions. We gave it to retailers, and of course, what do? We spend it, we directly inject it into the economy. So now we have to get this inflation down. And we had record savings at the time. And if you remember Powell saying at the last quarter of last year, it's causing supply chain issues. The inflation's up, but people are still buying because they have money. It's not that big a deal. So at the time, they were saying, oh, it's not that big a deal. They're still purchasing. So now we're causing supply chain issues. So what does that result in? Higher prices. So it just kind of creates this domino effect. And this is what really can happen here if we see a lot of this currency come back to the country, because these countries are no longer exchanging dollars for oil. And we have to face the fact as well, there's more dollars that exist outside of America than they do on the inside. Only 3% of our currency anyway is even in actual paper form. Most of it's digital assets. I know a lot of people are afraid of saying, oh, we're going to be afraid of going to digital and stuff like that. For the most part, we already are digital, but cash certainly has its place here. You never want to put the government in position here where they can press a button and everybody's broke with little to minimal options here, and we're back on the bargaining system. So that is the biggest issue that we see there. So hopefully we'll get some reports or something like that, maybe with some negotiations or just kind of seeing where this is going to go. I'm not saying this can happen in like 30 days and China and stuff like that is going to dethrone America, but you don't want to underestimate the plan they have, because this is obviously they have a plan, and you don't want to underestimate the time frame, saying that, oh, this is going to take a long time, and this is it's not something we have to worry about right now, because this is with everything that I just read, there's no way that this kind of developed randomly over the last week. This has been in the coffer. This has been in the notes ready to go. And I really believe that this is a response due to the Ukraine invasion and the sanctions that were placed on Russia, because ultimately America was put in a position where they're like, okay, well, most of the currency is in our dollar. We have the SWIFT system, and they could pretty much fight wars without even firing a bullet. And this is going to be a way around that system, because if the countries, especially the ones that we're more than likely to get into conflict with have their own systems, they have their own methods where they're pretty much going around the dollar loses their influence, the dollar loses its influence, and it's much more likely that sanctions and stuff like that is not going to work. So the next time Russia or China, let's say Russia wants to go full-blown on Ukraine, or China decides they want to invade Taiwan or something like that, it's that altercation is going to have to be settled physically instead of a currency war for the most part. So this is why they're positioning themselves. Again, I'm not saying it's going to take place. This is going to be something that happens in 2 weeks, but it certainly can take time. But ultimately, you have to understand this is the pivot, and this is the strengthening of the East that we're witnessing. So I'm just going to keep that in mind. The next thing I want to talk about is on this list, because they're giving us indicators of when we're going to print more money. Because the issue here is obviously they're saying, okay, well, the printing press has been off. We barely made it a year before we're doing bank bailouts. And now we're having new projections here saying that you're going to have to print money really quickly. Where is it? Right here, number 16 on the list. U.S. Social Security funds are projected to run out by 2033, right? And if the government says 2033, I'm pretty sure they're going to come out with another estimate in like 2 years, and it's going to be like 2028 or something like that. Just watch. But ultimately, that is a significant clue of what's going to be happening here within the next 10 years. We're going to have to print an enormous amount of money here, or the United States is going to default on Social Security, aka the Ponzi scheme will be up. Everybody that has paid into Social Security and it's not going to be there, there will be a default, or pretty much saying that, okay, well, the U.S. stole your money. And I don't believe they're going to let that happen. So this is a very important clue that they're going to print an enormous amount of money within the next decade. So what does that mean? That means that you should absolutely, and this is what we believe here even on the channel when I do my regular videos or here on the podcast, this is why you should be investing. You have to be in a position to even give yourself a chance to outpace that type of inflation, because inflation is here. It's going to, even if we get it now, we're certainly going to see some spikes here or so over the next decade or so, because I don't believe, even just from a not even getting into the unrest and stuff that we see here, just from the amount of people who are going to be PO'd about this, but even from a national level, you can't have this thing saying that, okay, well, the banks are defaulting, and you have record inflation and stuff like that, and now you're defaulting personally on the promises and stuff that you gave to your citizens, and not even really promises. You forced them to pay into something and you spent the money. So it's that is going to be solved here, and the only system that they have to solve something like that is to print money. So this is why you see these the inflation stuff that we have now, and ultimately, even if we are on if they're pivoting to Fed coin or something like that, it'll pretty much just be a full-blown digital version of what they're doing now. With our current obligations here over the next 25, 30 years, there's no way that we can have a fixed currency with our current obligations. So even if they are thinking about doing a complete reset or something like that, they're still going to need to be able to inject the currency with money. So they can probably do like a rebalance, and then we kind of start from there to so that's technically kind of a pivot, but ultimately they're still going to need to have control over that digital asset, whatever that is, Fed coin or whatever. So this is why something like a Bitcoin or something like that wouldn't work, because Bitcoin has a set amount, and we'd be pretty much further dividing it. We'd be trading Satoshis and cutting decimals and stuff like that. It'll have 5 decimals and stuff into it, because we're going to need to start at a much lower level in order to expand the currency. And then that also explains why something that has a limited min amount, something even like the internet currency, Dogecoin, so if you're using that, and it has you say it's only going to be 5 billion a year. 5 billion is not enough. Some years we're going to need more than 5 billion. And then when you have these hard caps, you can't manipulate it. They need to be able to bounce back and forth and say, okay, well, we need to tighten, or we need to ease up. So this is one of the reasons why you're going to see that push there. So do not sleep on this report here coming out saying that we're going to be pretty much U.S. Social Security is going to be bankrupt within about 10 years. That is a really, really big deal here. And another thing I want to point out here, you typically see things like this. This is what I believe happened with gold and the whole Fort Knox situation. I believe that's why we haven't got an audit there. But I believe that when you see stuff like this, the 41,500, they start selling these coins in there to quote unquote raise money. This also helps with price suppression. We've seen this with gold. I believe gold is seriously undervalued. Again, it used to be backed by the U.S. dollar, and the question you have to ask yourself was the dollar holding gold up, or was gold holding the dollar up? And we know the answer to that. So that would put gold probably like $50,000 an ounce, but I'll save that in another video. But if we're looking at this here, you typically see this type of suppression here when they're doing a pivot or whatever direction that they're trying to go into. So in 1971, when we came off of the gold standard, you've seen this. Since then, it's been a whole thing as far as the pivots, and we got so much gold. It's not as rare as we thought. We got a bunch of gold. That's why we're going to take 20 years and give Germany back its gold. We got so much gold, we're not even going to let you audit the gold that we have. Just know that Fort Knox is filled up to the top, and we're not going to let you audit it, but take our word for it. We got a bunch of gold. And then they came out with gold ETFs, paper gold. You don't need to invest in physical gold. We got all the paper gold. We'll hold your gold for you. Put gold in your IRA. You don't have to touch it, see it, please don't. We're going to keep it there for 30, 40 plus years. However much gold we say we have on this paper is, That's how much we got. Take our word for it. So and for all we know, it's probably, which more than likely is a another form of fractional reserve. It might be 10 claimants or 10 pieces of paper for each ounce of gold that they actually have. And I believe we see something similar to this with Bitcoin. I believe that if we get some Bitcoin ETFs and stuff like that, depending on how they want to do it, or they start selling large amounts into there, that is pretty much positioning themselves for them to have that Fed coin be the stronger asset, because you can't have the same situation that you have now with the dollar going one direction and Bitcoin going the other and crypto going the other. Pretty much any crypto that has a limited min amount, the dollar is going to outpace them. So you're going to see this cross, and you have to make your new asset seem strong here. So that's what they're going to use to try and encourage businesses to say, hey, don't accept a Bitcoin or a Doge or Cardano, whatever. Take our Fed coin here. It's much safer. Haven't you heard about all those companies we're investigating? Haven't you heard about all those exchanges going bankrupt and taking your money and running off to the islands and stuff like that? So it's going to be an angle, I believe, that we're going to see going forward for these institutions and for the government to kind of go forward and say, you need to take our coin. And never forget the fact that both JP Morgan and Citadel have applied for wallets and stuff in crypto. So crypto is not going away. So I know some of you may be fearful and say, oh, crypto is going away and we're just going to use the Fed coin. I don't believe that's going to happen. Crypto is certainly here to stay. I think it's going to be something similar to what we've seen here, where the U.S. Mint does, like gold and silver, but you can still buy generic rounds with bullion and stuff like that. So it's not gone, but I think they just want their method to be the preferred method. So just kind of keep that in mind there. I am a believer in both precious metals and gold and silver. I think it is extremely important to have both, and I'm talking about physical precious metals. I know crypto is literally to be digital, but I do not. Physical gold and silver is going to be the way to go, especially if you're looking at it from an insurance policy standpoint. So with that, all this information coming out with the bickering and stuff, even between President Trump and Biden, we talked about this earlier in the video. I believe that is going to be a catalyst, certainly for election, and we'll see the effort, or however they're going to try and drag this out for the nomination period. Because even with that, if Trump does get tied up in this indictment thing, I do believe that it'll just give DeSantis probably like a clear path where he can just get the nomination. So we'll see how that works. Hong Kong, China, and stuff like that, I believe that they're going to go with, they've already shown their interest and stuff like that, which is pretty much to promote the East. So none of that actually surprises me. Elizabeth Warren, she must not want to be, I'm scrolling back through the list here. Elizabeth Warren, she must not want to be reelected, but we'll see. We'll see. And ultimately, this is just coming to see where we're going to stand here within the next 10 years. So we have some movements here by some different nations and stuff to pivot away from the dollar. And ultimately, we know that we have some really big obligations coming up over the next decade, within the next decade, because I don't believe that it's going to take exactly 10 years. We'll probably run out before then. But we have some big obligations coming up that typically we only solve by printing money. So we have to make sure that we're doing things and we're investing in things like that, and certainly buying the market here. If these assets and stuff get cheaper, I'll say this until we're in Armageddon, owning the market and ETF, something like SPY, or just buying the S&P outright, that is going to limit your risk here as far as owning the entire market, versus these companies here that are probably going to get purchased by some of the big guys anyway. I always recommend starting your base out there. That is my personal opinion, not a financial advisor, but it is certainly something that you should probably look into going forward. So with that, let me know your thoughts on the topics we discussed tonight. It is very important that we cover these topics and we start making plans going forward. Download Anomalous Investor on any of your streaming platforms. Apple, even if you're listening to this, Apple, Spotify, watch the video version on YouTube, subscribe to the channel, share it with a friend, all that good stuff. I appreciate all of you, and I will see you in the next episode.